Natwest recently sent me an email on Thursday, the 22nd August, confirming there's been some affordability changes in their lending criteria. Now, this could mean that some people can borrow more and some people can borrow less. And what I'm going to show you today in this video is an actual affordability calculator I ran before these changes happened. And I'm going to do one right now live on this video and show you what that person can borrow in the same scenario as of today. So let's dive right in. So this is an email received from Natwest on the 22nd of August at 10:03, as you can see in the corner here. And what it says is, from the 22nd of August, we'll implement several changes to our affordability calculations as part of our annual review. Now, this could mean more people can borrow more and some people can borrow less. And it says these changes only apply to decision in principles, or otherwise known as agreement in principles, and full mortgage applications submitted on or after the 22nd August. What that first bit means is, if you've submitted your agreement in principle and your full mortgage application has been submitted before the 22nd August, the old lending policy applies. Anything after the 22nd August that has been submitted as an agreement in principle or full mortgage application has been submitted, the new policy will come into play. So have a look at this. This is an affordability calculator I ran with Natwest themselves on the 7th of May 2024 at 5:07 p.m. So this is before the affordability changes have happened on the 22nd of August. Now, according to this, my clients could borrow anywhere from 469,000 if they were going for anywhere from 469,500 if they were going for a 2 or 3 year product, up to 482,380 based on if they're going on a 5-year product. Now, just to show you the figures that we've inputted here, they're going for a 75% loan to value. They needed a loan of 465, so clearly the loan was affordable to them. They were really young, so they could do a 34-year mortgage term. Joint applicants, no kids, so they're probably living the dream, getting full night's rest right now, unlike me. And they've got an income of 75k for the first applicant, and what Natwest do is they average the latest 2 years bonus income. So an average of her latest 2 years was 5752. Mr. is on 18,600 per annum. He doesn't get any additions. And this, from memory, was for a car finance that they had, which was £345 per month. Now, as I showed you at the start, they could borrow 469,500 to 482,300, basically. Now, what I'm going to show you is a real-time affordability calculator with Natwest, and it is the 23rd of August. At time of recording, it's 4:15 p.m. And I'm going to replicate exactly what I showed you on the first affordability calculator on the latest new affordability calculator with the changes with Natwest. So what we're going to find out is, does it make a difference on how much you can borrow? So what I've got here is I've got the original affordability calculator I just showed you, and this is a real-time affordability calculator I'm running as of today on the 23rd of August, as I mentioned again. So let's replicate the details exactly the same. So just to reconfirm, the figures before on the old affordability calculator was 469,531 if the client was taking a 2 or 3 year product, and 482,380 if they're taking a 5-year product. So let's see if these affordability changes make a difference to how much this client can borrow. So 465, 34-year term, as we mentioned. Joint applicants, no kids, living the dream for now anyway. £75,000. Then we've got the bonus of 5752. Mr.'s 18,600, and then you've got the car finance of 345. Yeah, and no at the bottom. So let's go and see what this figure is, and let's see if these affordability changes make a big difference. Wow, look at that. So previously on a 2 or 3 year product, they could borrow 469,500. Now they can borrow 482,380. And on the 5-year product, they could borrow 482,380. And as of today, it's still the same, 482,380. So you could see from that affordability calculator that I ran today, that on a 2 or 3 year product, the clients could borrow more compared to what they could borrow previously. Now, lenders do this all the time. The lending criteria, lenders change when and whenever. Lenders change their lending criteria whenever they want. So for you to be up to date in terms of how much you can borrow with a mortgage lender, you should seek professional advice. So you should either be in direct contact with your bank on a regular basis, or if you're using a broker, stay in contact with them, because a loan of 15,000 if you wanted to go, for example, on a 2 or 3 year fix, and you can borrow 15,000 more, that potentially could mean the difference between you getting the property that you want and what you previously could not get. Now remember, emails like that only get sent to brokers. If you went direct to your bank, you will not get those emails. So you won't be notified if affordability criteria changes. So for example, you could reverse it, and previously you could borrow more than what you could borrow now. So if the amount you could borrow has reduced, you're none the wiser. You probably think you made an offer, you go in, bang, and then what happens is they review your application and you can't borrow as much as what you thought. So this is why you need to keep up to date with the market, up to date with lenders' criteria, because you don't want to be disappointed when it's your time to get on the property ladder. You want to ensure that you can get the loan amount that you need to get that dream home. I hope this video has helped. And if it has, make sure you tune in for the next one.